So I made over $6,287 on my funded account. Just enough to buy my private jet. Before I show you guys my trading strategy, I want to show you guys some proof that the profits are actually real. So first of all, on my FTMO account, I made over $6,287. And then on the 10K live account that I started at the start of this year, I made over 1.3K. So in total, that's about $7,400 if my math is correct, which I like to think that I'm an Asian who knows how to do some math, so I believe it's correct. Anyways, so I made over 7.4K in the month of February. And as you can see, this is basically how the 10K live account has been going. It has been in a very steady uptrend curve. We got some minor drawbacks, just like any other trading journey, we suffer some losses, but we always end up on top, baby. Now, let me share with you the trading strategy that has made me over $7,000 this month. And it's basically called market mechanics. It's basically a combination of smart money concepts, price action, and ICT concepts. And it's basically like all the most profitable trading strategies lumped up together into one, creating market mechanics. So let me just explain on the charts. So this was the trade that I took, and let's just go back in time a little bit. And let me just delete all this text to make our charts. Or maybe just put it right here, right? So that you guys can have a really clear understanding of my whole thought process. So like I said, right, I always make sure that I look at the higher time frames first, analyze the overall trend direction first, and you can see that it was clear as day, it was a bearish order flow, right? There was a lot of selling pressure, pushing the price down, creating your lower highs, lower lows, lower highs, and lower lows. So leaving all this break of structure, right? Whenever price break through a last low, it creates a break of structure right here. And over here, price created this lower high right here. It makes this huge consolidation, right? Chances are when there is a huge consolidation like this and price breaks out of that consolidation, price is going to go back up there to retest the consolidation, right? That is just pure price action. Now, when price makes this consolidation, I've identified a supply zone right here. You can see there's a supply zone right here, resulting in all this selling pressure. Whenever price gets up to this area right here, it always gets pushed all the way back down. And you can see this is the lower high, and you can see this is the lower low, right? The last low, and I can identify a break of structure right here where prices actually went back down here and break through the last lower low, right? So far, so good, right? Simple, pure price action concepts, very simple. And after I've identified this supply zone, this is what we call a point of interest, right? We want to wait for price to get to a particular zone, and that is when we can potentially enter for the trade. So at this point of time, I'm still focused on identifying other point of interest, maybe on a 4-hour time frame or the 1-hour time frame. And I can see there's an imbalance right here, right? You can see this is an imbalance. You can see this candlestick, this big ass long candlestick right here, which means at this point of time, there's a lot of selling liquidity, a lot of selling pressure and momentum. So what we did is that we identified the candlestick before this selling liquidity, before this imbalance was created, and that is give us our 4-hour order block right there. Right, so that's our 4-hour order block. Let me just clear all these things out so that I can give you guys like a better explanation and stuff, and you guys get a better and clearer understanding, because that's what I'm trying to do right here to make things simplified. I mean, like really simplified. So anyways, this is the 4-hour order block that we have right here, right? And then I can actually identify there's actually another order block like somewhere right around here, right? Somewhere right around here where price actually created this double top right here, right? Equal highs, creating a lot of selling pressure right here. So over here, there's another order block right there. And then price managed to get all the way down here. And when price gets all the way down here, this is actually what we call a liquidity sweep, right? Basically, price actually break through the last low, but it never created a new lower high. It just break through the last low, and then it went back up, right? Went back up to this last lower high right here. So over here, there was a liquidity sweep right here. So I want you to observe market structure at this point of time, right? Price was in a bearish order flow, and you can start to see that it kind of like transitioning into somewhat like a bullish order flow. But this is, by the way, this is just internal order flow. This is the minor structure. This is not the overall structure. The overall structure, if you look at it from the big picture is still a downtrend. So on like maybe the smaller time frame, like the 1 hour time frame, price is actually creating an uptrend, which you can see right here, right? It's somewhat like an uptrend. It is basically like an internal structural, your inner order flow, your internal order flow, right? So at this point of time, we can see, okay, uptrend. This is just a retracement, right? We know that it's a retracement, and we want to trade in alignment with the overall trend, and the overall trend is a downtrend. So what we want to do is to wait for this internal order flow, this internal structure, this uptrend on the smaller time frames to turn into a downtrend. And that is when we enter for the trade. Let me repeat myself. You want to wait for the smaller time frames to align with the higher time frame, and then that is when you can potentially enter for the trade. So at this point of time, the smaller time frame is still a retracement, is still an uptrend. So we want to wait for price to get to this 4-hour order block that we have right here, or this supply zone that we have right here, mitigate it, and change structure and create like some sort of a market shift to shift from this uptrend to becoming a downtrend. And that is when we can potentially look for our trade setup. So at this point of time, right, price has managed to get all the way up to this 4-hour order block right here, and it seems like it has respected it, right? Yes, actually respected it, mitigated this 4-hour order block. And if you look at this, price created another liquidity sweep right here, right? This was clearly like a liquidity sweep right here, right, where price has actually break through the last high right here. This is the last high, and it tried to create another higher high, but it did not create another higher low. So this was just a liquidity sweep where price know that clear as day is gonna go up there, sweep all the liquidity right here, and also tap into this 4-hour order block that we have right here, so that it can gain some sort of selling pressure. Now at this point of time, where is the last higher low? This will be the last higher low right here. I'll say somewhere right around here. There's a last higher low right here. And you can see price has already broke through the last higher low as well. So this is actually giving us our market shift right here. Right, market shift right here. Right, so market shift has already been created where price has actually break through the last higher low, which give us a sense of signal, right? It tells us that, okay, right now price is potentially prepared to change from an uptrend to a downtrend, and we can look to short AUD USD soon. But at this point of time, we are still very patient, because we don't want to enter immediately when price break through this market shift right here, break through this last low right here, because price can easily still break through it and then reverse and hit back up and just continue going back up even higher. We want to wait for price to actually go back down here, break through this last low, and actually come back up here and retest this area that created this liquidity sweep, right? Or the order block that resulted in this market shift. So this is the market shift that has already created, right? So we want to look for the order block that resulted in this market shift, which will be somewhere right around here, right? You can see this is the order block that actually resulted in this market shift right here. So this market, once again, let me just explain. So this is the imbalance, right? Imbalance, lots of imbalance, a lot of selling pressure pushing the price down. And this is the order block that created this imbalance. And this imbalance created this market shift. So this is the 1 hour order block that we should be watching out for. That means we want to wait for price to come back up to this 1 hour order block, and that is when we can potentially look for our trade setup, right? And this is when the demand will flip to supply, right? Where the bullish order flow is going to translate to bearish order flow, where the uptrend is going to change into a downtrend, right? So at this point of time, we wait, and we saw that price has managed to mitigate this 1 hour order block. And right here, let me just repeat right here, right? Like I said, once again, you don't want to enter right here when price created the market shift. You want to wait for price to patiently get back up to this 1 hour order block that we have right there. And boom, 1 hour order block activated, right? The best entry, right, would be if you enter for a sell position right here immediately after price mitigate this 1 hour order block, and you place your stop loss above it, right? And then you place your take profit all the way down or some shit, right? This would be a very nice sniper entry. But I did not get a best entry, so I was only managed to enter for the trade after price actually mitigate this 1 hour order block right here. And yeah, I entered somewhere right around here basically. And when I entered for a sell position right here, I basically placed my stop loss above this 1 hour order block right here. And if you look towards the left, right, there is multiple ways where you can take profit, right? Multiple price points, right? First of all, after you place your stop loss, you want to make sure that you place your take profit correctly, right? So there's actually a demand zone right here, right? And then there is another demand zone all the way down here, right? All the way down here. So these are the two places where I want to take profit, right? But I'm going to talk more about trade management later. But basically, this is still the first trade. Not really enter for this second trade yet. So the first trade, I placed my take profit all the way down here, right? So this was a 1:3 risk to reward ratio trade, right? Very, very nice 1:3 trade, right? Actually, I didn't place my stop loss that far. I probably placed my stop loss right here, above this last swing high right here. And you can see price starts going up, and you can see price mitigate and retest this 1 hour order block right here, right? The moment price actually retested this 1 hour order block right here, price actually created what we call your equal highs, right? One tap, two tap, double top, and boom, start heading back down right now, right? Start heading back down, and you can see at this point of time, it just created another mini order block right here, somewhere around here. But just wait and wait and wait, and you can see price starts going down, and you can see boom, right there, and then it created another imbalance, right? A lot of selling pressure right here, as you can see in this candlestick right there. And at this point of time, I still did not enter for the trade yet, but what I did was that I moved my stop loss to break even, right? Or I moved my stop loss to like even tighter, like somewhere right around here, right? So that I can really minimize my loss in case this trade does not go as planned. And then price starts going in my way, blah, 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 and then starts coming up to retest this order block, right? I knew for a fact that price is going to retest this 1 hour order block, right? And that is when I was looking for another position, like to scale it into another short position. So I saw an opportunity right here where price has mitigated this 1 hour order block that we have right here, and I entered for another sell position right here, right? So now I have two positions going to my overall take profit, but I made a promise to myself that I'm gonna scale out of this second position at this area right here, at this demand zone. So this is kind of my first take profit, and then this is my second take profit, right? So we still wait. You can see price goes down, right? It actually mitigated and actually respected this 1 hour order block. So this was actually a pretty decent entry. And at this point of time, we actually moved my stop loss for the first trade into break even, right? And this is my second trade. The stop loss is still above this 1 hour order block, right? You can see right after I entered for the trade, right? Price actually like created a lot of selling pressure, and it actually go back down and just crash and hit back down, right? And just goes down, 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 and smash our take profit right there, right? So at this point of time, I'm out of the second trade. Okay, I am out of the second trade. You know what? I'm out, right? Because honestly, I was kind of expecting price to reverse somewhere right around at this area right here, but I wanted to make sure that I secure some sort of profits back into my account, because the last thing I want to do is to be in that case where I have like $4,000 up in my trading account and it just end up turning into a losing trade or a break-even trade because I did not secure some sort of profits back into my account. So yeah, I secured some of the profits out of this trade. And right now, I have my first trade running all the way down to my my second take profit right here, my overall take profit, risk-free, completely risk-free, because I already moved my stop loss to break even, and it's also based on the market structure where this is the last lower high, and yeah, this is a very nice place to place my stop loss. So you can see I basically put a note right here. I scaled out the second position at 0.651 and then moved my stop loss of my first position to 0.6514. Yeah, so you can see right here, I actually ended up moving my stop loss all the way down here, because in the scenario where price actually respected this demand zone and actually reversed and hit back up, right, guess what? I managed to get like a substantial amount of profits from this trade right here. So yeah, there was the point where I want to hold the trade even longer all the way down here, but I wasn't really like sure that it's gonna go down there, and if I'm not that sure, I want to make sure that I secure a large amount of profits. So I placed my stop loss right here. So my stop loss has been moved from right here all the way down here. And next, look at what price does, right? Just observe what price does. Just goes down, goes down, goes down, and actually reverse. And I actually, right, what I did was that I don't know if I was lucky or whatnot, but I was actually very sure that price is not gonna get down here anymore. So the moment price actually like reversed at this area here, right, and I was at like the 15-minute time frame. The moment I saw this, right, I immediately got out of the trade, right? That means instead of getting out here, right, I immediately got out of the trade right here. Right? somewhere right around here. Before price retrace, literally right before price retrace, I got out of the trade. I was like, fuck this shit, I'm out, right? And at this point of time, I had a decision to make, right? Or rather, before I actually get out of the trade, I had a decision to make. Whether to hold the trade all the way down to this take profit and gain an extra 10 pips, or get out right here before price starts creating like a crazy reversal. And I made a choice to get out. This was a very conscious decision to make the choice to get out of this trade, because I don't want to hold the trade for days or weeks until price eventually get down here. It's not worth it. For me, I have like an expiry date for my trade, right? I want to make sure that I secure the trade, get out of the trade before the month end, which is before February ends, and also before the week ends. So this was on, like, I'll say this was on a Wednesday, yeah. So I don't want to hold the trade over the weekend, so I just got out of the trade right here. And I swear to God, right after I got out of the trade, price created this retracement and just starts consolidating and just like actually created like a massive retracement. And when I saw this shit, I was so grateful that I got out of this trade, like right here at the bottom, just right before price actually reversed and hit back up. And also the main reason why I actually get out of this trade right here was, one could be due to luck, but another was because I observed the loss in momentum, right? You can see this selling pressure, it starts to fade away. You can see the candlestick starts getting smaller and smaller, and it actually creates this doji right here. This is the first sign that I know for a fact that price will not have the power to go down even further. And once I start seeing this bullish candlestick right here, I know for a fact that price is about to retrace, so I just got out right here. So yeah, this was the trade that made me over $6,200, and also, no, actually this was the trade that made me over $7,400, right? This was the winning trade for the whole month that I have in February. And as you can see, this was a very simple trade. It was just based on a concept of supply and demand, price action, you know, smart money concepts, basically the market mechanics trading strategy that I basically formulated, right? And you can see price actually came back up to this golden zone that we have right here, respected this 79% right here, and then mitigated before going back down, right? This was just a pure Fibonacci trade. Very, very simple trade. Right now, I do believe that price is going to go all the way down to this demand zone right here, because this was just purely a retracement where price had lost steam and it needs to regain some sort of sellers, right? And right now, I'm pretty sure that price is going to go all the way down here to this the demand zone that we have right here, probably the next week or so. Now, let me show you another trade that I took on AUDUSD that was like a completely sniper entry on like a 5-minute time frame with a very nice risk to reward ratio. But in order for me to show you that, I need to take my time machine and go back in time. So let me go back in time and show you my exact thought process on why I entered for the trade. Boom. Yo, so we actually just entered for a buy position right here on Australian dollar. And you can see this was a very nice sniper entry. Right before I entered for the trade, right after I entered for the trade, immediately liquidity came in and pushed the price up. And there's a very specific reason for that. First of all, price has came down to this demand zone, right? That is why I entered for a buy position. Secondly, is because there was liquidity at this area, because there's an equal high right here. Thirdly, price actually formed the market shift right here on the smaller time frame. Like this is the 1 minute time frame. You guys know that I usually don't like to look at 1 minute time frame, but for this trade, I really wanted to test my limits to see how tight I can have the entries and stuff. And yep, I'm risking about 1% only on this trade. So this is, yeah, this is gonna be a pretty nice type of entry if price end up do go in my way, which is somewhere right above here. But we'll see what price does. Yep, you can see like clear as day liquidity have entered the chat. You can see the order flow is starting to go from bearish to bullish, because if you look at the higher time frames, right, the underlying order flow is still bullish, right? Price is still in an uptrend until price break this last major low right here. It is still counted as an uptrend. That is why I'm generally like confident that, you know what, this trade is gonna play out, because lower time frames align with the higher time frames, align with the even higher time frames, like the 4-hour time frame. You can see that all the time frames are lining up right now, and when that happens, it's like clockwork. You see your 15-minute, you see your 5-minute, you see your 1 minute, you see your 1 hour, 4 hour, all the time frames line up, all the bias is like the same, which is all bullish. That is when you know that you have a good trade, that you just gotta trust your analysis. Like right now, it's all about trusting my analysis and just letting the trade play out rather than constantly micromanaging it, looking at it, and just, you know, be anxious and emotional, right? We don't trade with emotions here. We trade with logic, and we trade according to our plan. And this was a pretty good setup. So let's get it, son. I think this is London session. That's why there's liquidity right here. Cheers, guys. Yo, I'm on a roll, guys. Just stacking up wins after wins. So here's an update of the trade. The trade that I just took over here. Right, I entered for a Y position right here. I already explained why. And there was order block at this area right here. And actually, meanwhile, I need to enter for this sell position right here because there was actually a liquidity sweep right here. This was actually the A+ setup that I was waiting for. So yeah, I wanted to enter for a sell right here, but it seems like price has already moved. Right, god damn it. Just because I wanted to record this goddamn video for you guys, I just missed this opportunity, but it is what it is. Let me just go back to this trade recap. So I'm a goddamn genius because I've been winning the past few trades, and it's all like sniper entries like this, like insane entries. So in this case right here, right, once I entered for a buy right here, price actually created imbalance right here, right? Liquidity has actually entered the market, and I knew for a fact that price is respecting this demand zone and it's about to go back up, it's about to skyrocket. So I identified there's an order block right here before this imbalance happened. So price come back down, retest this order block right here before creating another imbalance, creating another liquidity, pushing the price up. The moment they push the price up, right, I saw this imbalance and I immediately entered for a buy position right here and I placed my stop loss below here. Now, once price got to somewhere right around here, I've moved both of my stop loss to like right here, below this new higher low, and price just took over, right? There was just a lot of liquidity pushing the price up because it's the start of, I think, London session or so. Oh no, it's like the mix between London and Asian session. That is why there's a lot of volatility inside the market right now. So, yep, this was a pretty simple trade. I actually scaled in for this buy position. This was not on my 10K account. This was actually on my 100K FTMO account. I just opened a new 100K FTMO live account so that I can show you guys how I will trade a funded account. So this was on a funded account and this is on my 10K live account. So yeah, this was just a pretty decent trade. What the heck is that? Freaking FX, bro. What the heck is this, bro? So now that you guys have understood this trade, let me just share with you one good thing and one bad thing that I did for this particular trade, right? So on this trade, one good thing that I did was the trade management. I was very intelligent when it comes to moving my stop loss and minimizing my risk, right? So as price creates this new order block, I move my stop loss, and the price creates another order block somewhere right around here, right? I just kept moving my stop loss, right? For the first trade, I made sure that I move my stop loss to break even. And then once price gets up here, I move my stop loss to somewhere right below this order block right here. And same thing at this second trade right here, so on and so forth. I just kept on moving my stop loss. And one bad thing that I did was not really trusting my analysis, right? I believe that my first take profit was all the way down up here, right? I knew for a fact the price is going to get all the way up here simply because this is a very strong supply zone and price move from supply to demand and demand to supply. So this is the demand and price is going to move up to the supply right here. And you can see price actually end up going back up there, but I actually end up taking profit a little bit early right here, missing out about 2 pips. It is what it is, but yes, it's purely because I did not really trust my analysis on this one. So this is some psychological thing that I need to work on myself. And most likely this is because I actually lost a few trades in a row before I actually took this trade. So my confidence was like a little bit staggering, right? So I didn't really trust my analysis on this one. So this was my bad, but I still ended up, missing out 2 pips, which is alright, but just that I could have made more money on this, but it is what it is. So that's one good thing and one bad thing. If you notice, one common factor about these 2 trades that I took on AUDUSD that made me a lot of money, it is the fact that I have excellent trade management. I'm always making sure that I'm thinking about how I can minimize my risk by moving my stop loss to break even and then moving my stop loss to profit, and then considering scaling in so that I can maximize my profit. If I'm right on 1 trade, why not be right on 2 trades, 3 trades, 4 trades? And just continue to be right and just stack up positions if I know for a fact that I'm confident that this trade is going to go in my way. So I might as well make the most out of it by stacking in more positions. So that is really how I trade, right? Market mechanics, trading strategy is extremely good when it comes to getting good entries, good exits. But what's the best about it is really the trade management, where you are constantly thinking about how you can really minimize your losses and maximize your profits by scaling in, scaling out, and moving your stop loss into profit and to break even. Welcome to the Uncut Section, my fellow tribe members. I believe that the reason why I'm so good at trading is not because I have the best trading strategy, but purely because I have a very solid mindset. I have an elite trading mindset, a big monumental brain that not many traders have in this world. So to replicate my success, you need to replicate how I think when I'm trading. So here's 5 trading psychology tips that will allow you to trade just like the trading geek himself. Firstly, accept the fact that the market can do anything it wants. Let me repeat myself. The market is random. The market can do anything it wants. It doesn't have to go up just because you want it to go up. This is exactly why a lot of times when you are so ready to enter for the trade and you have all the confluences for you to enter for a buy position, the trade still goes wrong. It still does not go as planned. You still end up with a loss. Even though you are confident that the trade is going to go up, you want the trade to go up, but still go down because the market is random. Alright? There's no 100% way to really make sure that we can predict the market. What we do is that we try to have an edge, formulate an edge, and that could be in the form of a trading plan or in the form of trading strategy, which allows you to know exactly when to enter and when to exit at the cases where it's the most highest probabilities. But as always, it will always be 50-50. No matter how confident you are in the trade, there's a 50% chance that you're going to win it, and then there's also a 50% chance that you're going to lose the trade. The second tip is know when to get out if you are wrong. Before you enter for the trade, you need to know exactly where to get out if the trade does not go as planned. That comes in the form of a stop loss, right? That is why you should always make sure that no matter how well prepared or how confident you are in that trade, just use a goddamn stop loss. Because you're going to lose trades from time to time, right? Like I said just now, the market is random. Even when your trading plan works, your trading strategy works, you might still lose a trade. Losing does not mean that your trading plan does not work, or it doesn't mean that your trading strategy is not working. It could just be because the market is goddamn random. So just think about this and just really be introspective and just meditate on this about the randomness of the market and stuff. Because once you accept that you can be wrong, right, it will allow you to last in this trading journey much more longer. Because you're going to suffer losses no matter how good you are. No matter whether you are a beginner trader or a professional trader, you will suffer losses. That also means that when you suffer losses, it does not mean that you are stupid or you are pathetic at trading. It just could be because that you follow your trading plan and you're extremely confident, but you still suffer losses because the market is goddamn random, right? Just remember this fact, right? But it brings me to the next tip, the third tip, which is to take full responsibility of your trades. You can't blame the market every single time that you lose a trade, because sometimes, or rather most of the time, you lose a trade because you are a complete idiot. You make trading mistakes, you trade based on your emotions, you revenge trade after a losing streak, you overtrade, you don't go against, you don't follow your trading plan. All of these trading mistakes cause you to lose money. And when that happens, when you make a mistake, make sure you take full responsibility, you own up to the mistake, and you learn from it so that you can learn what to improve on and how to prevent yourself from committing this mistake again next time. So it's to really make sure that you take full responsibility for your trades, whether it's a win, whether you made $5,000 on this trade or you lost $10,000 on this trade, you own up to it. You take full responsibility, you acknowledge it, you embrace the flaws, and you make sure you incorporate ways to remove these flaws inside your trading plan. So most of the time you realize that the losses stem from the mistakes mentally, right? It's basically something that you do mentally that cause you to make those mistakes that result in those losses. It's very rarely where your trading strategy is not working, because trust me, if you have a solid trading strategy that has been backtested to be proven, or rather to be proven to be consistently profitable, it's gonna work, right? Then it's just really lies down to your mentally and your emotionally, whether how you can handle your emotions under pressure or under stress or whatnot, right? So learn from your mistakes or your loss, forgive yourself, and then trade again against the next day according to your plan, right? Just move on from your losses once you have taken full responsibility for it, and just move on from it. Next is don't get lost in the numbers, because a lot of times, right, what we do is that we spend a lot of hours study, learning, and pouring a lot of our time and our hard work into the charts, and then we end up getting losses, right? We end up losing money, maybe at the start there's beginner's luck, we make a lot of money, and then start losing money, and then we start hitting a big loss. And then when the big loss hits, new traders don't know what to do because they've never experienced this. They thought that trading is a way to get rich as fast as possible, and they never experience a big loss in their entire fucking life. When that happens, what they do is that they start to change their trading strategy without realizing the fact that they lost that much money because they were not able to handle their emotions properly. It was not because of their trading strategy, it's because they could not handle their emotions properly. And then they start changing their strategy, and then they realize they are still losing with this new trading strategy, and then they start changing to another strategy, and just like a vicious loop of constantly trying to find the next perfect trading strategy, which does not fucking exist. There's no strategy out there that will make you profitable and make you win every single trade in a row. It's really all comes down to yourself, guys. And really just make sure that you don't look at things in terms of the short term. You don't look at one trade and then think about that trade reflects your trading performance as an individual. What I mean by that is that if you lose one trade, you don't think that you are a shit trader just because you lost one trade. Or you lost 5 trades, it still does not mean that you are a shit trader and you will never succeed at trading. It does not mean that. You need to look at things in terms of the long term. Okay? Do you think you'll lose 1,000 trades in a row? If you lose 1,000 trades in a row, then yes, you are a completely shit trader, and with all due respect, but you should quit trading. But if you lost 10 trades in a row, you lost 5 trades in a row, you still lost 15 trades in a row even, it does not mean that you are shit at trading. It just means that you need to figure out what is going wrong. Why are you committing the same mistake over and over again? And how can you improve as an individual and eliminate all these weaknesses from your trading performance and operate at a higher capability? That is what you need. Lastly, think like a winner. Now, in life, confidence is key, right? When I was broke, I pretended to be rich. And I'll go to these fancy restaurants wearing like $100 suit, but I still walk like I belong in that place. I walk like I was rich. I speak like I was rich, even though I had $100 in my bank account. I acted like I was rich before I even got rich. And then I got rich. It's quite funny, isn't it? How powerful is confidence? Because when you are confident in your trading capabilities, when you are competent, you get extremely proficient at trading. And you start making less and less mistakes. And you start winning more and more trades. The money starts to grow. The money starts to compound over time, and it starts getting more and more and more over time. And it all comes down to your thinking, because your thinking leads to your actions, and your actions leads to results, your habits. For example, trader A, he wakes up, open up the charts immediately, and then starts staring at the charts the whole day, looking for scalping opportunities, and he enters for 100 or rather 50 trades today. And he does not have a trading plan. He's just randomly opening trades. They see this green candlestick, enter for buy. They see this red candlestick, enter for sell. Oops, I got crazy. And then there's trader B, right? He's extremely disciplined. He thinks like a winner. He knows that, okay, he's not profitable yet, but eventually he will be a profitable trader. Eventually he will. because he has the desire to succeed. He has this burning desire within him to succeed at trading. He wants it bad enough. He will do whatever it takes to succeed. Whether it is to journal down his trades after losing multiple trades in a row, or following his trading plan even though he don't feel like it, he does it anyways, because that is what a winner does. When you start to act like a winner, you start to think like a winner, you start to get the results of the winners. You start to get consistent profits. You start to break even on your trades. You're no longer losing. You're always ending the month off with a profit instead of a loss. You are extremely disciplined when it comes to following your trading plan and journaling down your trades. You are able to track all your trading data, and you can eliminate your weaknesses and think about how you can incorporate your strengths into your trading strategy. You figure out exactly what's your trading style, whether it's scalping, intraday trading, or swing trading. This is what a winner does. And if you want to win in this game, you need to be extremely patient, extremely disciplined, and trust the process and focus on the process and not the outcome. So these are my 5 trading psychology tips, and as always, I hope that you guys have enjoyed these Uncut Trading episodes, right? I'm really trying to be as raw and authentic as possible with you guys, right? I believe that my reputation is preceded because of how honest and transparent and authentic I am. That is why I show live trading profits, live results, and I share with you guys the truth of trading. That trading is going to be extremely difficult. Yes, for sure it's going to be difficult. It's going to be a long-ass journey, but I believe you can do it. If you're watching this video, I believe you can do it. Even when the whole world collapsed and nobody believed you, I believe that you can do it. Because you are a tribe member of mine, and we operate differently. We move differently. Fuck the rest of the world. It's us against them. 2024 is ours to take. Continue watching my videos. Continue studying them. Learn my wisdom. Absorb the knowledge like a sponge. And together, we will succeed. If you want to join the trading tribe, click the first link in the description. And as always, remember, you're just one trade away. Make sure you check out the last Uncut Trading episode if you have not.